Hi, good morning. Another tepid day for the session for the Indian markets yesterday. However, the global markets ended strongly yesterday. It's been a couple of weeks of not so good news from the macroeconomic point of view. The job payrolls data in the US was below estimates. The economic data, as in the IIP, and the growth of the economy in Europe is still at a very low level, and the euro breakdown risks have been resurfaced yet again. Uh, we witnessed the problem in a small nation called Cyprus in Europe, which comprises of just 0.5% of the total Eurozone GDP. However, it had an effect, it had a wide stark effect on the global markets. Uh, Indian markets have not been doing particularly well. The global markets have not really been battered to that extent as the Indian markets. S&P yesterday ended strongly and is still trading about 1560, which is a crucial level. However, Indian markets have almost given 4 to 500 points in the last month or so, falling from 6,000 to almost 5,500. The market is currently trading at near 17p, which indicates that the market is not so expensive at this point in time. So it could probably encourage a lot of foreign investors to put their new money or the money which they had pulled out over the last couple of months. On the economic side of view, the trade data would probably be the next focus of the market, and the most crucial thing for Indian as well as the overseas market in the coming week and in the coming month are the earnings for the last quarter of FY13. Indian markets kickstart the earning with the IT company Infosys declaring its results on Friday, and earnings in the last quarter for the last quarter are not expected to be really great, but at the same time, any major disappointment in the earnings could probably lead to further free fall in the markets. There is a lot of volatility in the global markets, which could also affect the Indian markets. Uh, Perhaps the global risk aversion has taken place to a slight extent as of now. Investors are probably more risk averse now than they were about a couple of months ago. Due to that, commodities have cracked, which could have a good short-term impact on the Indian economy because of a lower import bill. Oil has cracked, gold has cracked. However, at the same time, if you see global risk aversion would lead to a lower FII inflow in the Indian markets, which again is not really good thing. And with markets already given 500 points, it may seem for investors that they feel comfortable to enter these levels. But then again, as I said, if earnings continue, if the earnings season will be a disappointing season, you can have a further free fall in the markets. Stock specific action is KN India has found a lot of oil in new well in its Rajasthan block. GlaxoSmithKline Consumer Health will have its board meeting today, and Coal India is in plans to increase its capacity to produce the extra coal that's required. Uh, One bad news for gas and refinery major Reliance is that it has it has stopped its supply of gas to power transmission companies when exploration rate in its KGD6 basin fell to the lowest level. So clearly, these are that would be a problem for Reliance, which has also corrected nearly 15 to 20% since it's when it reached a level of 900 rupees. On the central bank front, the US and the Japanese central bank would continue to purchase about approximately $80 billion worth of government bonds a month individually. And based on the weak economic data, although there were some risks that the US Federal Reserve would probably prematurely step the gas of the stimulus program, which would obviously not be good for the equity markets because now it's like a mockery. If you talk about probably no quantitative easing or stopping the stimulus, or probably the printing of money which flows into the assets, equity markets would be rather disappointed then. But to encourage the Fed to probably devise an exit strategy in the near term, we'll have to see a lot more and a lot strong economic recovery in the US and the Europe and the global economy as a whole. Thanks very much.